Hey, a common misconception is that owning short-term rentals is an easy and quick way to get into real estate investing. However, what you'll learn today is that many investors jumped on the easy money train over the last couple years, and now they wish they were not on that ride. And according to AirDNA, it looks like profits for short-term investors are down 12% year over year. And so today we're going to look at two things. One is why are short-term rental profits down so much for these investors? And number two, is there actually a way to make money at short-term rentals? Let's get going. Hey, I really want to know what you think about short-term rentals and Airbnb and companies like that. Are they actually easy ways to make money? Do you own a short-term rental? Is it successful? Are you profitable? Or are you one of the folks that think, hey, this is way too risky. There's no way I would ever own a short-term rental. You also may be someone who thinks short-term rentals are a horrible idea for the housing market and neighborhoods in general. Either way, comment below. We're going to start with a quick article from Resi Club Analytics that talks about short-term rentals. The title of the article is, "We're in the midst of an Airbnb hangover. Just look at these two charts." For many short-term rental owners, the past year has been challenging, according to the article. To understand how the short-term rental market has fared since the pandemic and where performance is headed, Resi Club analyzed data provided by AirDNA, a short-term rental analytics firm. So if you don't know what AirDNA is, I encourage you to check them out if you want to see any more about the short-term rental market. It's really a website that's geared towards Airbnb short-term rental owners to help them analyze the markets that they're going to go into maybe, or how to price a unit correctly. They also have a lot of resources for short-term owners. The big picture for many short-term owners, the past year has been challenging. Indeed, on an aggregate, short-term rental hosts experienced year-over-year revenue declines every month from May 2022 to January 2024. According to AirDNA. So this first chart from Resi Club and their article, it shows the revenue for short-term rental hosts over the past couple years. And you can see the year-over-year increase or decrease in profits. So it's easy to see, like back in January 2019, profits were up year-over-year 13.9%. And as you move through 2019, they stay actually pretty good. I mean, there was a drop of 18%. Looks like this may just be when the pandemic started, but then it shoots up through the roof. Look at this. And in fact, at one point, it went up 61% year over year. So profits in April of 2021 versus April of 2020 were up 60%. But then it declined and kept declining. And there's definitely an up and down. However, overall, it has gone down, and now it's been negative for at least the last year. It goes all the way back into 2022. So in actuality, investors of short-term rentals have been losing money for almost the past couple years, except just 2 months. And that is February of 24 and March of 24. Looks like they turned a profit compared to last year. And what this chart is pointing to is that it's revenue par, or revenue per available room. Now, one of the things I can clearly tell you about the profit declines is that if you are one of these folks who invested and now your profitability isn't near what it was before, maybe you're not booking as many rooms, maybe you're not booking your rental as much as you did the previous year. If you are on an adjustable rate mortgage, which a lot of these investments are, there's no doubt that you're suffering because your mortgage has gone up in cost, but your revenue now is declining. On top of that, you've got property taxes, increased insurance. So it's definitely not favoring, the amateur investor with short-term rentals, especially if you're not using fixed rate debt. All right, the article goes on. In 2021, we had a big explosion in unit level performance for short-term rentals. Graham Gallagher, AirDNA's Director of Economics and Forecasting, tells Resi Club, you could just set up a tent in your backyard and make a fortune. And that was mainly because there was pent-up demand and hotels were slower to mobilize. It was kind of a gold rush. After the strictest lockdown eased, demand for bookings of short-term rentals surged. Stimulus flush Americans, many of whom were working from home, sought space and vacation alternatives. Finding packed hotels unappealing and international travel limited, this surge in short term rental revenue combined with quantitative easing that drove mortgage rates to historic lows led to a second home buying spree as a rush of amateur investors entered the Airbnb market. However, just as many of these new Airbnb hosts started to list their homes in 2022, the spike in short term demand began to lose momentum. So here they're talking about simple supply and demand in this next chart. And this to me really tells the picture of what's going on. By the way, supply and demand is what's affecting the housing market right now. Obviously, if you got a ton of supply and demand shrinks, you're going to have price declines. So this chart shows the year-over-year supply and demand change for short-term rentals. So the yellow is actual year-over-year bookings. The blue is year-over-year growth of available units. And I really look at this as a gut check for the industry, because if supply is exponentially increasing and demand is not, you're definitely going to have lower profits and lower revenue numbers. So you can see back before the pandemic, from a supply end, you can see if you look at the blue line, you can see how it dropped right at the pandemic. The growth of available nights of supply dropped significantly, right? Probably because people were like, we don't really know what to do as Airbnb hosts with the pandemic, the rules around it, and people were obviously locked down and not able to travel, sometimes not able to really, go anywhere or do anything. You all remember how the pandemic was. So then after the pandemic eased, you have a massive upward trend in supply. And you can see in May of 2021, we had a 23% increase in supply of short-term rentals. Then it went down a little bit, but then spiked again to January of 2022. That looks like the peak, 34.4% year-over-year increase in the supply of short-term rentals. Now that has been slowing, right? We don't have the growth that we did before of short-term rental supply, but nonetheless, it is still growing, right? So just in April of 2024, you can see we had a 9.5% growth in the supply of short-term rentals. Now the yellow line shows the revenue. So again, just like before, after the pandemic lockdowns were over, you had a big increase, a 53% increase in bookings. Then at one point, it got, again in December of 21, it got to 41.5% growth year over year. But then look after that, just down, down, down. And these are growth rates year over year. So now you flash forward to April of 2024, we have a 0.4%, just a 0.4% increase in demand of short-term stays. So again, I look at that as kind of a gut check. So again, the first question we had today was, why are investors of short-term rentals now losing money? Well, one reason is supply and demand. Obviously, there's more supply in a lot of areas in the United States of short-term rentals, and demand's not as high. So more choices, less revenue, less profit. So that's the first reason why investors are losing money. Now, number two reason why investors are losing money, in my opinion, is regulations. So a quick session with ChatGPT reveals a lot of areas in the United States where regulations have limited or completely banned short-term rentals. Now, you may not like ChatGPT as a side note, but that's okay. I like to use ChatGPT, but I always do check the sources. So in this answer that the bot gave us, good thing is they actually cited the sources, and I'll link all the sources in my description below. But look at some of these cities that have actually clamped down or outright banned short-term rentals. New York, New York. That's a big one. Local law 18, implemented in 2023, requires hosts to register with the city, live in the property with their guests, and only rent to a maximum of 2 guests for stays under 30 days. So again, I'd love to know and comment below. Are you in one of these cities, or have Airbnb or short-term rentals, have they been banned in your neighborhood or your town? I'd love to know. Comment below. Number two, San Francisco, California. The city limits unhosted rentals to 90 days per year and requires hosts to register and have liability insurance. That's more of just like a regulation, not really a ban. Los Angeles, only allows primary residences to be rented out and requires hosts to register. So think about that one for a second. If you're only allowed to rent out your primary residence, that means if you go out and try to buy an additional property just to Airbnb it or short-term rental it, not going to work. They're not allowing you to do that. And we'll look down the list here: Santa Monica, Miami Beach, Boston, Washington, D.C., Seattle, New Orleans, Honolulu, Portland, Denver, Chicago, Las Vegas, and Austin. I suspect there's a lot more if you really search through the internet. I don't see Dallas on this list, but Dallas, Texas, I know has some strict Airbnb rules as well. And it's not just big cities. Little towns, little areas are also banning short-term rentals. I live in Ohio, just outside of Columbus, and there are little burbs and towns around Columbus, and even Columbus itself have really clamped down on short-term rentals. One of the reasons why towns and cities are clamping down on short-term rentals is that many times the tenant who rents the place just for a couple nights will throw a party or, disturb the neighborhood with loud music or, trash and just extra cars in the driveway. Plus, a lot of people don't like having neighbors that constantly change out every single night, especially if they're in a neighborhood with mostly single-family houses. And that could be you. You could be one of the people that think short-term rentals, Airbnb, they're the scourge of society and we should ban them all. But again, tell me what you think, comment below. So that's the second reason why I think short-term rental investors are losing now more than they were before, is because more regulations are coming into place. So as an example, I know somebody personally who has a short-term rental in a lakeside community not far from where I am. Well, the lake has 2 different counties. So 2 counties encompass the entire lake. One county is okay with short-term rentals. The other county is not. And so on the lake in that county that doesn't like short-term rentals, I know someone who bought a house. Their idea was to short-term rental it. They did for a year successfully, made a lot of money, but then the rug got pulled out from underneath them. Regulations changed, and now they're going to have to long-term rent it or sell it. So that's the second reason why I think profit is down for a lot of these investors, is that regulations have came in and basically changed the rules, and now they're scrambling to figure out what to do. So before I move on, do me a favor, and if you've got any value out of today's video, please hit the like button below, and you've left some comments, I hope already, right? But also subscribe. Please subscribe to my channel and share the video. That means a lot. And again, I appreciate your time watching this video and going through this journey with me. So third reason why I think a lot of short-term rental owners are hurting right now is that they are not treating the property and the short-term rental like a business. They're treating it like a hobby. In other words, they may own a second house or a beach house, or maybe they just saw something on TV or maybe on YouTube and thought, this is easy. I'm going to go out and buy something when interest rates are really low. I'm going to make a ton of money because they think, well, shoot, I can rent this for $200 a night. And they do some quick math and figure $200 a night times 365 days a year, cha-ching, cha-ching, cha-ching. However, that's not the reality of the situation. In reality, you can't account for every night being booked. And also, you really got to know your market to be able to set the right prices. So again, that's reason number 3. People are not treating it like a business. All right, so now we've talked about all the doom and the fact that owners are getting slaughtered out there, or many of them are. But can you actually make money and be successful with short-term rentals, being the average everyday person? The answer is yes, you definitely can. So speaking from experience, I own short-term rentals. I own long-term rentals too, but I'm going to take you through a few tips I have about short-term rentals and how to be successful doing it. And the first thing I would stress with a short-term rental is think practically. Think utilitarian. Don't think romantically. So what do I mean by that? Well, a lot of people, again, get into short-term rentals and are excited to buy new furniture, make the place super cute and nice and fancy. They probably overdo it and overspend on their furnishings. So to that note, you got to think outside the box. There are tons and tons of investors who have houses in neighborhoods that they need to rent for maybe $200, $300 a night. And they actually probably have to rent them over half the nights of the year in order to make some money and actually make a profit. So instead of doing that, take a different approach. So this is what my short-term rental looks like. Now, It's not a single family house. It's actually an apartment building I purchased, and the units are used as short-term rentals. And what I did, and I'll show you in a second how this compares to other units on the market. I went after a niche of the market that a lot of people weren't thinking of. And so I cater to professionals, to traveling professionals who either need to work at a college, or I rent to a lot of nurses, and maybe even some students. I've rented to some med students. I've rented to some engineers, professors, but I'm not renting to vacationers. So the town that I chose to invest with short-term rentals is a little town called Mount Vernon, Ohio. Now, Mount Vernon doesn't have a lot going on. I mean, it only has like 75,000 people, 50 to 75,000. But what they do have is they have a hospital and they have a college. They actually have a couple colleges. So I knew, based on some market research, that people coming to that town would have to drive 40 to 50 miles to find anything decent, any decent hotel room at all, if they had an extended stay. So the first thing I did was made sure that I was investing in a market where it had a utilitarian need, not a vacationing, can't wait to get to the beach need. To me, that is trendy and that can die off fast. It's also pretty expensive and there's a ton of regulations. So I chose to look at a small town where people actually need affordable housing. This is my unit. It's here on the screen. And you can see by the pictures, I mean, it's all rehabbed. It's all renovated. It's nice. It's clean. It functions well. It's safe, but it's not blinged out. I mean, we're talking basic finishes, right? Basic flooring. I've got a nice TV in there. I've got nice LED lighting. Got furniture. A lot of it I purchased from Amazon, but some of it I got from some discount stores in the area. The cabinets, when I bought the building, for instance, the cabinets were older, but I just had them refinished. I didn't replace a lot of them. My countertops are not granite. You know, the flooring is vinyl flooring, nice flooring, and waterproof, but it's not hardwood flooring. It's certainly not, upgraded tile or anything like that. But again, I focused on utilitarian type stuff and practicality versus romantic finishes and fluff. Now, if you look at my unit compared to other units out there, this is where it gets really interesting. So I'm on AirDNA right now. You can go to the website anytime you want. I don't even have a membership to AirDNA. I don't use it as a professional, but a lot of people do. But it'll compare your unit against others when you type in the city that you're investing in. So I typed in Mount Vernon. Here are all the short-term rentals in Mount Vernon. Now, so I noticed that a lot of these rentals are over $100 a night for the daily rate. But the occupancy, the rate at which they're actually renting out their units, is relatively low. So here's one at $132, not that bad as far as price goes. They've filled it 68% of the time, but it's a groovy barn in Mount Vernon. So it's kind of off the beaten path. It's not really downtown or, in walking distance, all the amenities. Here's some other ones, right? Creekside Barn in Mount Vernon, right here. 4-bed, 2-bath, 8 guests, $376 a night. But I'm in the 1-bedroom category. So let's look at the 1-bedrooms. 1 bedroom, 1 bath, 2 guests, $101 a night, 14% occupancy. Here's another one. 1 bedroom, 1 bath, 17% occupancy, $93 a night. Let me show you mine on here. Here's mine. 1 bedroom, 1 bath, 88% occupancy. Daily rate, $60. Now, the trick with Airbnb, if you want to maximize your dollar, is that turnovers. When guests come in and then they rent the place for just a couple days, then they leave, you have to go in there and actually turn the place over. You got to get it all freshened up, cleaned and everything. A cleaning service, or if you do it yourself and you account for your hours, it's going to cost you at least $100, if not more. So you get a couple rentals, or if you get a guest to rent a couple nights, maybe it's a couple $100 you get. In my case, it's $60 a night. You're only going to get $120. Math doesn't work out, right? So that's why I think a lot of people struggle is, again, they're not thinking practically. So what do? Well, I only rent on a 30-day or more basis. So my minimum stay is 30 days. So that's my first tip. You got to think practically. Number 2, you got to plan for the worst. So if you want to buy a short-term rental, make sure it'll cash flow as a long-term rental. Because what happens if regulations change like they did to my friend, where basically now you can't rent your place anymore like you plan to, and it won't rent long-term to turn cash flow. So what do you end up doing? You have to sell it. So don't be that guy. Think long-term, think what will happen if the regulations change. So for me, if the regulations change in Mount Vernon and they say no more short-term rentals, Jason, can't do it. I just turn around and rent the places long-term and they cash flow fine. So that's paramount, right? Plan for the worst, hope for the best, but assume nothing. Also, plan for the worst regarding emergencies. I had a boiler system go out for the building just a few months ago when it was still cold. And I had to scramble and find a guy to help me fix the boiler basically in the middle of the night. Not fun, but the tenants need heat. So you got to do what you got to do. Had to go out and buy heaters, give them to the people to supplement their heat while we were fixing the boiler. You got to have emergencies like that thought of ahead of time and planned. That's important. Remember, you're in the hosting business. This isn't a long-term rental. You're really a host, almost like a hotel. So plan that way. All right, third tip on short-term rentals, if you want to get into it, is buy right. If you will make money on how you buy the property generally, meaning if you spend way too much money for the property, if you're not financing it correctly, you don't have the right budget strategy with renovations, you can get slaughtered. So make sure you buy right. So how do you buy right? Well, glad you asked. I actually have a video about how I like to buy properties. It's right here. Check it out now.